Hello dear traders, global stock indexes remain in the red. Investors fear that the US is willing to impose an embargo on Russian oil and gas supplies. A mad rally in the commodity market and simmering geopolitical tensions set the stage for beyond demand for safe haven assets. Japan's Nikkei slumped to a 16-month low after Japan had slapped another package of sanctions on the Russian economy. Now let's discuss what trading sentiment prevailed in the currency market during the Asia-Pacific session. The US dollar index is extending its steady climb, heading for the level of 100 points. Now the index is consolidating above 99 points, the highest mark since May 2020. Apart from global risk aversion, the US currency is asserting strength amid expectations of aggressive tightening by the Federal Reserve. A lot of analysts predicted that the Federal Open Market Committee could venture into a sharp rate hike of 50 basis points at a time. On the Thursday, market participants are braced for a report on the US inflation, which is expected to accelerate to an alarming annual rate at 7.9% in February. The Japanese yen, another safe haven currency, is still trading sideways against the US dollar in the range between 114.80 and 115.80. Japan's monetary authorities are also concerned about the looming high consumer inflation due to elevated commodity prices. Aiming to mitigate the strain of soaring inflation, Bank of Japan's governor Haruhiko Kuroda says that the regulator's goal is to ensure growth of wages under such economic conditions. The dollar-yen pair did not decline yesterday. The technical picture is changing a bit for the currency pair, as traders are sitting on the sidelines of the Fed's policy meeting. Our experts do not rule out a further downward move on a condition that the price would slide and settle below 114.71. The Australian dollar has an excuse for optimism. Today, the National Australia Bank released its business survey for February. The Business Confidence Index jumped to 13 points, the highest level in the last 4 months. The actual score beats the forecast of 1 point and is much better than the long-term average reading at 6 points. Business confidence improved in all economic sectors, thus proving that the domestic economy has been getting back on track in the wake of the pandemic crisis. As we see, the Australian dollar gave in to the US dollar. The pair did not settle above 0.7400. Traders are having a pause to estimate the developments in the Russia-Ukraine conflict and its economic fallout. Meanwhile, demand for the US dollar as a safe haven asset is putting pressure on risky assets, including the Aussie dollar. At the same time, the Australian currency stays afloat, benefiting from its status of a commodity asset. The AUD-USD pair suspended its move in the range of 0.7291 and 0.7315. If the pair declines and settles below 0.7291, it could resume its fall, heading towards the target of 0.7227. And that's all for now. We wish you gainful trading. Don't miss the next video on our channel in a couple of hours. See you!